Hi everyone, welcome to the channel. I'm going to be a little controversial and come out and say it. This brand right here, Sam Adams, the beer just doesn't taste that good no matter the flavor. And if you want two good tasting beers, we have this one, Miller Genuine Draft, or this one over here, Miller High Life, the Champagne of beers. Now, with that off my chest, we're going to take a quick minute and look at Sam Adams' parent company, Boston Beer's financials, and then perform the stock valuation for the company. So let's jump right into it. Starting at the top, even though revenue was down in 2023, overall it has CAGR just over 9% over the past 10 years for a total growth of 122%. Then net income and earnings per share have been at its lowest over the past 3 years compared to all the other years. So a little disappointing if you've been a shareholder, with net income down more than 15% since 2014, while earnings per share is down 7%. Now, the company doesn't pay a dividend, so we'll move on to their share count, which typically I like seeing this on the decline. But we can see here for Boston Beer, they had some mixed years with some years with the shares increasing. But overall, it is down since 2014, and hopefully they can continue their share repurchases moving forward. Finally, free cash flow, though 2014 and 2021 were negative. For 2023, it has been the highest over the past decade and more than doubling since 2015. But overall, these financials do show some inconsistent growth. But let's move on and we'll look at their stock valuation next. Here's the valuation setup for Boston Beer, and we can see intrinsic value $153.76, and with a 90% margin of safety, brings it down to $138.38. Now, this is based on a 9% short term growth rate over the next 10 years with a 10% discount rate, and I am using a 3% long term growth rate. Now, up here in the top right, see the net income. As I mentioned during the financials, it's actually down over the past 10 years. It's down about 15%, which would be a CAGR of almost minus 2% a year. And same thing, earnings per share is down as well over the past 10 years, down about 7%, which would be a CAGR at minus 0.82%. So the reason though I'm using 9% as a short-term growth rate is because if you remember revenue is actually up. So I typically don't use revenue. I usually look at net income and earnings per share for my growth rate, but because those two are down, that's why I'm using the revenue growth rate at 9%. Yes, it's disappointing that their net income and earnings per share are down, but I gotta believe that eventually they're going to turn that around. However, with my intrinsic value at $153, the current stock price is trading at around $290. So pretty significant premium paying for a Boston Beer Company. And I'm actually somewhat surprised that it's so high. But let's see what kind of growth rate we would need to actually get to that $290 valuation the market currently has it priced at. So up here, I'm going to take that growth rate at 9%, and let's just see what happens if I increase it to 15%. 15% growth rate brings the intrinsic value up to $248.48. So not quite at that 290 just yet. So let's just increase that to 17%. All right, so 17%, we get the intrinsic value at $291.51. So pretty much where it's currently trading. So that's pretty high of a growth rate, at least for a beer company, especially a beer company that's already established. It's not like this is a growth company or a tech company. So this 17%, you really got to be optimistic on Boston Beer's future potential. But I just don't see it. Even their Truly brand, I don't think is growing that much anymore. I know it was big several years ago. But let's look at a few other data points before we move on. And starting down here, PE ratio, we see 46 or just over 46. So again, pretty high valuation if you're going to be buying into this stock. But good sign, they don't have any long-term debt. They don't pay any dividends, so they have no dividend yield. Share count, so one bright spot here, see down about 9%. So I do like seeing that. But net profit margin, typically I like seeing companies over 10% over the last 10 years. You see just under 8% in the last 3 years at 2.5%. So, some concerns there with their profitability. And one other data point I really like looking at is this return on invested capital. I like seeing companies over 10%. We can see back 10 years, 5 years ago, they did achieve that. But last couple of years, over the 3 years and 1 year, they are below that, in that 5 to 6% range. So again, a little concerning, especially because it's on a decline. So if you're going to invest in Boston Beer, I would have a little concerns, and you probably want to look into the stock a little bit more. But let's move on, and we'll look at my portfolio performance next. Here's the portfolio performance for March 19th. A little mix. You can see some tech stocks like Palantir, Tesla, Google, fintech stock PayPal down for the day, along with some other stocks like LyondellBasell, which is a chemical company, slightly down, LYB, and T. Rowe Price also slightly down. But overall, mostly green, and actually portfolio up for the day. So nice sign there. But let's move on and we'll look at the overall performance. So here's the overall performance for all my positions. Point out Google. See, Google has been up over the past couple of weeks, and recently, or just the other day, they came into agreement with Apple for using their Gemini AI platform. I guess going to be incorporated into Google phones sometime in the future. So hopefully that would help boost the stock. I know it's been a little bit down over the past couple of months, but it finally seems like it's turning the corner. And also PayPal, I know it was down for the day, along with Google being down for the day, but PayPal has been kind of flat over the past several months and slightly down. But see, here is finally turning a corner, also, at least for me, up just over 5%. So hopefully that can continue moving forward. But I hope you enjoyed this video, got some useful information. If so, consider subscribing, and I hope to see you next time. Thanks for watching.